What we did see on Friday of last week was this down day. Now, it wasn't a big down day. So again, we see today silver is rallying back to the upside. But what this could be showing is just a little bit of near-term exhaustion. It's been a big move. And if we just take a look at percentages here, just from November 21st low to the recent high, that was a 33% move in silver. I mean, we're talking crypto numbers here on silver, which is pretty exciting for the precious metals group. There's no doubt about it. And it's not to say in 5 years we can't be at $100 an ounce or even in less. But at least for me over the next 2026 period, let's say the next year, I'm looking at a potential high of around $70 to $75. I have a big long-term position in gold, and I think we're headed to 5,000 even by the first month or two of 2026. But if not, we still could see a pullback to 35 to 3,600.
Gareth Soloway is a veteran market strategist known for his technical analysis of commodities, equities, and cryptocurrencies. Silver has delivered an impressive rally, gaining roughly 33% from its November 21st low to recent highs, returns more commonly associated with crypto than precious metals. While last Friday saw a modest pullback, prices have already rebounded, suggesting strong underlying momentum. Still, such a sharp move can signal near-term exhaustion, raising the possibility of consolidation before the next leg higher. Longer term, silver could eventually reach triple digits, though a more realistic 2026 target may be in the $70–$75 range. Gold also remains bullish, with upside toward $5, despite potential interim pullbacks. Now, we present the clips from Gareth Soloway's interview. Before we continue to discuss this, please subscribe to our channel The Metal Moves and activate the bell icon for timely updates.
I would say is start paying attention to this key trend line here. There's a little bit of a trend zone here. If you look, you can see that you've connected these lows from this last vertical move before this consolidation. To me, at least, if we did surge up, that would be where I would start to anticipate a stall out, a bigger pullback. And again, bigger pullback is a shorter term movement, but it could replicate this type of pullback we saw back in October, where we dropped from about $54 back to about 45. So again, look for that type of movement. That would be my short term upside target, maybe around $70 per ounce. And then once we get there, I would generally say that look for that 20% correction. I know that seems like a lot for silver players, but in reality, 20% drops in silver are almost commonplace historically, right? I mean, we do get these bigger moves in silver. Now, in terms of support, in technical analysis, what we always look at is the prior major highs that were resistance and caused a pullback. So this pullback here, that now becomes our next base point, meaning that it's kind of like, think about it like a jumping block. So here initially we had resistance and it rejected price to the downside here. We came down and it took a little time. We hit it, we got rejected, and then finally broke out. If we do have a pullback, that would kind of be the big drawdown buyable level for us as technicians. And that's right around $54 per ounce. All right. So again, that just gives you a rough idea of upside potential. And then if we do hit that level, look for that pullback to about $54 an ounce. Silver, it's super, super tricky because, needless to say, the economics of the U.S. can play a role in the industrial side of this versus gold. It's a little bit more clean cut. But what I would say is that in general, as long as we maintain this beautiful uptrend, and what we could do is we can go to a larger time frame and look at this, right? So this is a kind of it's a little bit more inaccurate in terms of potentially not playing out. But what I like to do is I say, okay, when we surged previously on silver, when we had these vertical moves on silver, what type of percentages were we seeing? And here we had in the 2010 to 2011 move, vertical up, and it was about 175%. And then here in this period from the COVID low to the recent high there, we had about 153%. And so I kind of use that as my starting block and say, okay, well, if we replicate, let's say somewhere in the midpoint of that move, where would the bigger move take us before, let's say, we could go into kind of a more bearish type price movement? And that kind of honestly, it brings us to this. I mean, if we do 163%, it brings us to about $70 to $75, which was what we talked about as that prior trend line. And one of the things I love to see in charts is synergies, right? Factors that align, because when factors align, it means the odds are there's a higher probability that that's going to be a stopping point. So again, it's not to say in 5 years we can't be at $100 an ounce or even in less, but at least for me over the next 2026 period, let's say the next year, I'm looking at a potential high of around $70 to $75. Gold obviously is not pulling back as much because of that. And so one of the things we saw recently, and this is just a beautiful educational piece in technical analysis, is you had the big move up in silver, and then we started to get into this little bit more of a consolidation phase, and it's called a wedge pattern. And essentially wedge patterns are two lines that are converging. And price initially, because it has a long way to go, it's the most volatile. But as it tightens inside of the wedge, it gets tighter and tighter and tighter until we break out or break down. In this case, we broke out right up here. From that breakout, we got beautiful bullish consolidation, and now it's been pushing up. And so again, classic bullish consolidation leading towards this more recent up move in the chart. And really what we have to be watching as a technician, and listen, our emotions, I have a big long-term position in gold, so obviously I'm bullish longer term, but I always try to kind of separate that with my shorter term analysis and just say, hey, listen, let's look at reality here. And reality is, as of now, is we have to break above this all-time high to get that next momentum leg higher. And so as of now, notice how the last couple of days we've stalled out just shy of the 4,400 level. Let's watch over the next few weeks. Can we make a new high? Because if you don't make a new high, you have a lower high, and it brings the possibility of a bigger pullback in early 2026. And so for bulls out there, we have to see a violation of that 4,400 level. If that happens, then I think we're headed to 5,000, even by, the first month or two of 2026. But if not, we still could see a pullback to 35 to 3,600.
Gareth Soloway explains that silver's recent action remains bullish despite a modest down day last Friday. The pullback was limited, and prices have already resumed their upward move, reinforcing strong momentum in the precious metals sector. From the November 21st low to the recent high, silver rallied roughly 33%, a move more commonly seen in cryptocurrencies than traditional commodities. While impressive, such a sharp advance can also signal near-term exhaustion. From a technical perspective, silver is respecting a well-defined uptrend and recently broke out of a wedge consolidation pattern, a classic bullish signal. Soloway notes that a move toward the $70–$75 zone could mark a temporary top, followed by a 20% correction, which is historically common for silver. Key support lies near $54, a former resistance level now acting as a base. Longer term, aligned technical factors suggest $70–$75 is a realistic 2026 target, with $100 still possible over a multi-year horizon. Share your thoughts on his analysis in the comment section below. If you find this video informative, please support and turn on notifications to stay informed about our latest videos.